Have you ever wondered what it would take to pass a prop firm challenge, and not only pass the challenge, but make consistent monthly income from prop firm trading? Have you failed prop firm challenges several times, or lost accounts because you exceeded drawdown limits? If any of this is the case, watching this video till the end will be the most important thing you do today. Why? Because I've passed several prop challenges and made consistent profits on prop firms for over 3 years now. And in this video, not only will you learn how you can also start passing prop firm challenges whenever you want and start making money on them consistently as I do, but there's a surprise waiting for you in this video. The surprise is that you can get a 20K account totally free to start trading today. But you will only find out how you can do this if you continue watching this video till the very end. This surprise is courtesy of SabioTrade, where I do most of my prop trading these days, who are sponsoring today's video. More on them later. If you've been around on YouTube, I'm sure you've seen videos that claim prop firm trading is a scam. And I'm sure you've also grown skeptical of them because you haven't made money on these platforms and haven't seen anyone get paid out on these platforms. But I'm here to tell you that passing prop firm challenges, trading prop firms, and making consistent monthly profits from them is easy if you know how to do it. How did I know this? I've been trading prop firms for over 3 years while making consistent profits on these platforms. I don't know about your favorite online Forex guru, but in those 3 years, I've passed 3 100K account challenges, passed more than 5 lesser account challenges, and have generated profits consistently over those 3 years. But I'd be lying to you if I told you I came out of nowhere a seasoned trader who can pass prop firm challenges anytime he wants like some of your favorite trading gurus. It didn't used to be this way for me. I used to fail prop firm challenges and lose accounts all the time. During that period, if failure had a name and a face, its name would be Harry, and it would look just like me. I failed these challenges and lost accounts so much that I started to question if I had what it takes to be a successful trader. What was wrong with me? Am I just destined to be a loser with trading? Will I ever be able to prove to myself and my family that I can make trading work? And after trying for years and failing over and over again, I started examining these failures. I started looking for reasons why I was failing these challenges and losing these accounts. And I came up with 5 reasons why. I looked for the solutions to these 5 reasons why I was failing, applied the solutions, and boom. Just like that, everything changed. I'll now go over those 5 practical solutions I applied that changed everything. In the order you should also apply these practical solutions. The first 2 solutions were very important, trading psychological shifts I had to make, and the rest were the practical actions I needed to take to solidify these psychological shifts. Let's get into it. Number 1, the necessity of failure. Contrary to what your favorite YouTube trading guru, who flipped an $800 account to $2 million all in 1 year of trading, will tell you, failure is part of trading. And not only is it part of trading, it's a necessity for trading. A necessity that paves your path to mastery and eventually, success. But unfortunately, most of us were told from childhood that failure is bad. So bad we should resist and avoid it at all costs. And most of us live our lives and trade from this mental, psychological frame of avoiding failure at all costs. But the paradoxical thing successful traders eventually find out is that the cost of avoiding or resisting failure is success. Because all the failures you've had in your trading till now are not failures per se. They are your experience, and teachers urging you to learn from them. The only way they become wasted is if you fail to access and learn from them. Most traders are guilty of not accessing their failures and treat them as plagues they never want to revisit. Heck, most traders don't even keep a trading journal to reflect on their unsuccessful trades. When I made this psychological shift of embracing failures and treating them as my best teachers, my trading got better. So it's quite simple, really. I started keeping a trading journal and started analyzing why I was failing prop firm challenges and losing accounts. I'm encouraging you now to also look back on your prop firm trades, or trading in general, and figure out why you're failing. When I analyzed my failures with prop firm challenges and trading in general, one word kept coming up repeatedly: drawdowns. And I'm willing to bet top dollar that that's likely the problem you're also having. So why was I violating the drawdown rules set by the prop firms? And this brings me to the second trading psychological shift I had to make. Number 2. Prop firm success isn't about making money. It's about not losing money. Imagine for a second that you're the money guy. You know, that guy that drops his hard-earned cash for traders to trade with, make a profit, and share the profit at the end of the month. You know, the prop firm investor guy. It's a sound business model, right? Make more money, happy days. But the only hiccup is that just 8% of traders worldwide are profitable. So how do you identify these 8% of traders? You can't just hand your hard-earned money over to anyone who buys an account from your prop firm for them to blow your money into oblivion. This is where drawdowns come to the rescue. You set a certain daily percent of loss a trader can take, and an overall percent of loss he can take, to quickly know if this trader is worth his salt or not. As a trader, the most important thing to know is that trading of any kind isn't about making profits. It's mostly about your ability to stay in the game long enough to catch the opportunities. Losses are part of the trading game. But you don't want to be wiped out. You want to keep playing till you can recoup those losses and make more. It's like a saying in soccer that defense wins the league. Attacking is attractive, and playing defense is boring. But when it comes to the long game, the team with the best defense wins the most trophies 9 times out of 10. Seeing your YouTube gurus tell you you can make $100K on a single trade in one day is attractive. Flipping an $800 account into $2 million in 1 year is attractive. But what are they leveraging? How are they managing their risk? Because if they can make those kinds of high returns on a single trade, what would the losses be like if the trade goes against them? Unless they win 100% of their trades, which is a statistical impossibility. But of course, they won't tell you about their losing trades and how they lose accounts. That's a topic for another day. But as traders, if you want to win the game of prop firm trading, and any trading, you need to first learn how not to lose money that will exceed your drawdown. Different prop firms have different drawdown limits. For instance, SabioTrade, that I currently use and are sponsoring today's video, has a drawdown of 3% daily loss limit and a 6% trailing drawdown limit. So, the question is, how do I not exceed my drawdown while trading prop firms? Well, the only way is risk management. Number 3. Risk management in prop firm trading. If there's one thing you take away from this video, I want it to be that you understand, internalize, and know that risk management is king. That's what I always advocate for on this channel if you've been paying attention. As I have seen no trader become profitable without prioritizing risk management. Practicing good risk management in prop firm trading is the key to prop firm success. So, as a prop firm trader, what will I do to manage my risk properly? First, I will assess my level of risk tolerance and determine how much risk I can embrace per trade without getting emotional and start making rash decisions. I risk between 0.25% to 0.50% of my prop firm account. So if I'm trading a 100K account, I don't risk more than $500 per trade. This allows me to take multiple losses without exceeding my drawdown. Let's take SabioTrade for instance, with a daily drawdown limit of 3% and an overall 6% trailing loss. You know you cannot take excessive risk with the account. It means with a 100K account, I will be risking between $250 to $500 per trade. And this suggests I will have to take and lose at least 14 trades daily for $250 per trade and 7 trades daily for $500 per trade to lose my account in a day. Well, I know some traders take this many trades daily, especially those with scalping strategies. But if you lose that number of trades on a stretch, then I can confirm to you that you don't know what you are doing yet and have no business trading a prop firm account. As I said earlier, losses are part of trading. No matter how experienced you are in trading, you'll still have losing runs. But the most important thing is to manage your risk. For instance, last year, I had a series of losses because I was moving houses and I wasn't paying that much attention to trading. I took a lot of trades during this chaotic time until I decided to stop, till I was settled and could focus better. The amazing thing about this event is that my overall drawdown was less than 5% of my account in that period. So, I didn't lose my account. When I was focused again, I recouped my losses and got back in profit. Moving on, once you have the risk management figured out, one other thing you need to do is only trade what you understand and have back-tested. The principle of only trade what you understand and have back-tested is a fundamental tenet in trading. It's an emphasis on the importance of informed decision-making and risk management. It's your duty as a trader to limit your activities to financial instruments, strategies, and markets that you have a comprehensive understanding of and have rigorously tested through backtesting and trying out in a live market multiple times. Why? Because understanding the dynamics of a particular market or asset class enables you to make more informed decisions and predictions. This process helps you evaluate the strategy's effectiveness, identify potential weaknesses, and refine your approach. Let's consider an investor who lacks a deep understanding of options trading, but decides to engage in complex options strategies without thorough research or backtesting. Without a solid grasp of the intricacies involved in trading this strategy, this trader exposes himself or herself to unnecessary risks, potentially resulting in substantial financial losses. Trading what you understand will only position and propel you for success in prop firm trading. Speaking of sticking with known and trusted things, this brings me to this video's sponsor, SabioTrade. SabioTrade is your go-to platform for a seamless and rewarding prop firm trading experience, where you can enjoy unlimited retry if you miss the profit target, 100% refund, premium trading education, and free trading signals. With a quick one-step assessment period, you can access from $20,000 to $200,000 liquidity and a one-time profit target of just 10%. SabioTrade have no minimum trading days, leverage of 30:1, and a 3% daily loss limit that ensures you have flexibility and control. Their 6% trailing drawdown limit helps traders be fearless. Experience the SabioTrade advantage, where smart trading meets limitless possibilities. To join, there is a link with a discount code in the description of this video. Remember, I said I had a surprise for you at the beginning of the video. In collaboration with SabioTrade, we are giving away 20 key accounts to 4 people watching this video. All you have to do to qualify is to write a comment on any of these 3 things. 1. Your experience with prop firm trading, either the profits or losses, the good or the bad, and what you've learned about them that you think other people should know. 2. What you learned from this video and will be applying to your trading going forward. And 3. One distinct reason why this video is the best video on prop firm trading on YouTube. Over the following week, I will be in the comment section to pick the winners. You should know I read and reply to every comment on my channel. I said earlier that I would put the opportunity to win a 20K account at the end of this video. But this isn't the end of the video. I did this purposely to weed out those that don't even have the discipline to stay and watch a 10-minute plus video that could change their trading for the better. If you don't have that discipline, you don't deserve the 20K account. And speaking of discipline, this is the last piece of the puzzle, the final action step that would make you a profitable prop farm trader. Number 5. Discipline with your trading plan is the only way you win. You need to create and stick to a sensible trading plan and strategy. The key to success in trading, particularly when trading prop firms, is establishing a coherent and explicit trading plan. This plan should outline your trading objectives, strategies, risk management protocols, and exit plans. It is critical to adhere to your strategy, particularly when you're experiencing losses, as emotions can sometimes cloud your judgment and lead to impulsive and rash decisions that deviate from the plan. By sticking to the plan, you can sidestep these pitfalls and increase your probability of long-term success. If you intend to create a trading plan, then you may consider the following steps. First, you should establish specific, measurable, actionable, and meaningful trading goals. Pick the market and financial asset to trade, along with a trading strategy and risk management plan that fits that market. As a guide, buying one lot of a Forex pair is not the same as buying one lot when trading gold. After that, set your risk management plan as I've already shown you. Next, set rules on limits, such as take profit targets and an exit strategy that specifies when to close positions should your prediction be wrong. Perhaps most importantly, backtest your trading plan by assessing its efficacy using historical data. Monitoring and evaluating your plan regularly enables you to determine its effectiveness and decide whether any necessary modifications are needed. Developing a trading plan is a personal process, and there is no one-size-fits-all formula to follow. Therefore, it is critical to tailor your trading plan to your specific objectives and circumstances, and to remain committed to your plan even when experiencing losses. And with this, we've come to the end of this video. And thanks again to SabioTrade for sponsoring this video. A quick disclaimer before you go. Registering with SabioTrade doesn't guarantee your profitability on the platform. And by all means, do your own research, as anything recommended in this video is not to be misconstrued as financial advice. And if you do register with SabioTrade, I will get paid a commission, which will go a long way in helping me keep these types of content coming. Now that we've gotten that out the way, if you feel like you've learned a lot of strategies and know them, and you're still struggling to be profitable, the solution might be fixing up the psychological aspect of your trading. I go over exactly how to do that in a video up here. If you made it to the end of this video, I appreciate you. And if you found this video helpful at all, please destroy that like button, subscribe to the channel, and turn on the notification bell so you don't miss it when I drop videos like this in the future. Thanks for watching.